Hi everyone, welcome back to my channel. My name is Phi and this is Money Philosophy. Today we will take a look at Tesla chart at the eve of Tesla earnings that will be taking place tomorrow, January the 26th after the market closes. Today, as of the close, Tesla closed at $918.40, down 1.25% from yesterday. Seems like the market overall has been in the red and Tesla is no exception. But how would Tesla behave tomorrow and the subsequent days after earnings, knowing that Tesla will have a wonderful quarter? That is the record quarter on the delivery number and the top line revenue and bottom line net income as well. So let's take a look at the stock price action and see where we could go from here. For those of you who are interested in my projection, I apologize. This quarter, I do not have time to do a full-blown projection. I would refer you to Rob Maurer for a detailed projection there. There are a lot of things going on with my other priorities, and I am trying my best to balance multiple things, so I did not get a chance to do a full-blown quarterly estimate this time around. But let's take a look at chart first. So before we start with Tesla, let's take a look at the QQQ. QQQ volume today was 179%. The volume is about 2/3 sell volume and 1/3 buy volume. However, yesterday the buy volume was really dramatic after a few days of being in the oversold territory. This particular candle here is a very clearly reversal candle. The price action for today does not necessarily confirm the reversal, because today I would like to see QQQ get to about $365 to consider bullish reversal confirmation, but it did not. That said, this particular candle here is an indecision candle, an inside candle from yesterday's candle, so that is not bearish at all. If anything, it is a bullish continuation if you consider this candle is a bullish candle, which I think it is in my opinion. So where do we go from here? I think we have at least temporarily contained the bleeding from this chart pattern here, and everything is dependent upon the Fed's announcement tomorrow. If the Fed comes out with a quarter-point rate hike beginning in March, I think that is what the market is expecting, and so I think that would be a reason for the stock market to get eager again, only because a lot of the price movement in the last couple of weeks already factored in the rate hike. If Fed changes a statement from anything that is more optimistic and less rate hike, less percentage hike, then I think the market will go up vigorously. Like I said, even if Fed doesn't say anything different from expectation, I still think the market is going to go up. Now, from a technical standpoint, Fed statement aside, I think that it is also time for reversal, because you see that the chart here has been oversold for quite a while. This candle also is a signal of bullish reversal. So if we were to reverse tomorrow, we should get back to yesterday's high, which is right around $353, if not higher. If we are moving, stagnating right around $344 where it ends today, that is not a good sign, because it could continue to break down further. So I'm hoping that QQQ will end the day tomorrow between 350 to 365. Here's the daily chart for Tesla. The volume was only 108%, so compared to the QQQ at 179%, Tesla is not that heavy in volume, but it's definitely 100% based on the last 30 days. So that is decent volume as well. However, the daily candle is not super encouraging. It seems like it tried really hard to get to about $950, but somehow lost all of that and pull a failed rocket launch at the end of the day. Now, that failed rocket launch here, this failed rocket launch here, the way that it's positioned is that it's very much in the continuation zone of this candle over here. If this failed rocket launch were, if Tesla were to gap up above 100 days SMA, which is around 959, move up a little bit, and then ended the day right at 959, which is 100 days SMA, then that would have been a true failed rocket launch, meaning it attempts to launch, but it could not move further. higher, and that would be bearish. In this particular case, I don't think it's necessarily bearish. It just tells me there's a lot of sellers out there, but it is not to the point where everybody and their brother wants to sell. I absolutely think that there are a lot of investors trying to get in Tesla as well, trying to hold on to Tesla long term. So I don't see Tesla move down vigorously again anytime soon. So tomorrow is earnings, right? And we really don't know how a stock behave when it has earnings. For example, if you have options expiring this Friday, January the 28th, and if you are in the green, I would recommend you taking it off. I certainly would take it off if I were in your shoes, because I really don't know where Tesla will behave after earnings. If you have been in the red and you really don't care about saving whatever left in premium, then sure, let it run, right? And if you have options that are further out, I do think the Tesla investors and traders take a little bit of time to process the information. So if Tesla doesn't spike up right away on Thursday, it could do so either Friday or the week after, assuming macroeconomics environment cooperates. So I think if you have time, it's a good move to leave it on. But if you don't have time, playing with earnings is just a gamble in my mind, because it could go up, it could go down, right? If it does go up and you have a call, wonderful, especially if Tesla goes up vigorously like it did at production result. So let's take a look at Tesla hourly chart here. You can see that the consolidation zone is right around 50 days SMA, which is now at 1045. So from 1045 to about 920, you have about $125 to go. And we'll have to see where Tesla will go tomorrow, but the range is very narrow. The upper pivot point is $945, the middle pivot point is $925, and the bottom pivot point is $876. If Tesla goes down again tomorrow to the 800 or 876 range, I think that's also a good opportunity to add shares, knowing that this company is going places and there's a lot of profit and net income to be grabbed in the next decade or so. But if you are looking at options trading, once again, you're up against earnings. There are a lot of people betting on the volatility right after earnings, so premium is very much high and bid up right now. So the range between 100-day SMA, which is 958, and 50 days SMA, which is 1045, is not much. It is about $80 range here. Let's speculate a little bit on earnings price target on the upside as well as the downside. So on the upside, for starter, I can see Tesla surpass 1045 and get back to somewhere around 1105 and 1189 on the first day, if it does shoot up that much. I also have a feeling that Tesla would be gapping up on Thursday, which is right here, and then start moving back down, selling off, right? If Tesla does sell off and pull a very bearish candle on Thursday, then it could take a couple of days for Tesla to shake it all out. But if Tesla has a indecision candle with a gap up, that would be something I look forward to add shares or calls. So it depends on how it's going to go on Thursday. The chance of it gapping down is very low unless Tesla fails expectation, which I doubt, right? So at this point, I think the odds favor a gap up with a sell-off, or a gap up that will stay up. So those are my general target. Now, how big of a gap up is a different story. So this goes back to my original point. If you were to hold on to your options past earnings and a Tesla only have a $10 to $20 to $30 gap up, I think the premium that is built in with earnings volatility will dissipate the moment Tesla opens, and a $20 gap up is not enough for you to have significant gain, even if you guess the correct direction. If Tesla has a $50 to $100 gap up, sure, that trade would pan out really well for you if you were to buy a call on Tesla. Once again, I am not a big fan of trading earnings, because to me that is a 50-50 proposition. So where do we go from here as investors and traders? As investors at $918, I think we have a bargain. I think in 2 to 3 years, Tesla could easily get to $2,000 to $3,000 per share, if not higher. If you want confirmation bias, definitely check out Solving the Money Problems, one of his most recent videos. He had really good analysis on Tesla earnings and his outlook, as well as potential price target for Tesla. I really like watching him. If you are looking at a short-term trade, however, I think $918 is a decent entry point for a call option, but the qualification is that you might want to go farther out and not just play with earnings. Even though the odds favor a gap up, chances are you're still not making enough to make it worthwhile if you were just to play earnings. I'm not betting on $100 gap up. I'm not betting on $50 gap up, even though it is entirely possible. I'm just betting on a moderate gap up between $10 to $40 gap up, just so I keep my emotions in check and not going all in on Tesla options at the eve of Tesla earnings, right? So those are my general thought process. Let's take a look at a couple of options here. So to start, I'm going to look at February 18. Once again, anything closer to February 4 or January 28 is really risky for me, at least for my risk appetite. I'm looking at $1,000 strike price for February 18. Right now, we at about $5,000. This number hasn't changed much from 2 days ago when I make the video, just to tell you how premium hold up pretty well before earnings. If you're looking at 1045, which is 50 days SMA, it is right now at around $3,700. So that is also a good odd that will buy you about 3 weeks and a half. And 1045 is, after all, only $120 from here. Tesla could easily get there if it goes up vigorously after earnings. If you look for something safer, you could look at July 2022. At that point, I'd be looking at $1,300. This is right now at around $6,200. Once again, you have a few months out at about $6,200, and $1,300 is achievable, arguably, right, if Tesla surpassed previous all-time high. So for $6,200, that is not a bad bet either. Although keep in mind, Tesla could easily consolidate for the next couple of months, and there goes 6,200, right? So it depends on your risk appetite. I think this is decent enough, but I would cut loss at around 40% or so. If you're looking at a further out call option, this is January 2023. $1,300 would be right around $12,800, give or take. So you would have the whole year until next year at around 12,000 or 13,000. $1,300 next year sounds like very probable in my mind, right? It is only about $55 above previous all-time high, and it could get there sometime this year easily. So I think this is a decent bet as well, and it will give you a lot of time. So for this $13,000 premium to go down to $6,000, it takes a lot. It takes Tesla to go back down to about $600 or $700 to lose half of your money, because you have a lot of time, right? So that is also a relatively safe bet. A lot of you have been asking me about leap call options, and I know if you're a die-hard Tesla fan, this is something you have been looking at, and so do I. In fact, it might be a wise move to sell some of Tesla's shares to buy call options so you can leverage the upcoming gain for 100, 200 shares, as opposed to holding just 30, 40 shares if you have a smaller amount to play with. So if I'm looking at January 2024 expiration, I would be looking at $1,400. Right now it is right around $21,000. This is about 2 years out. $1,400 is achievable. It is about $500 from here, and I think Tesla should be able to get to $2,000 or beyond by January 2024. But let's keep our emotions in check. As much as we are excited to look at the prospect of a bullish wave after earnings, we have to realize that Tesla sometimes take a while to materialize, right? So there is always a chance that it will tank seriously and heavily right after earnings, and all of our premium will dissipate really fast. So we have to go in any trade accepting that fact in order to not letting the trade affect our mindset and manage a trade well, right? So don't forget the 200 days SMA is at $811. So that is entirely possible as well, although the odds still favor the upside in my opinion. Once again, any call options have to be further out in order to avoid premium deflation right after earnings. That's my play. If you do want to play the lottery, by all means. I've heard plenty of successful story with lottery. It is just not me. But I think that there's a lot to be looking forward to as a Tesla investors, as well as the traders for tomorrow and beyond. So good luck to all of us, and thank you very much for paying attention thus far. Until the next video. Bye.